So guys, let's talk about an important subject today. I ran across an article basically bringing up the point that SoFi may not be the best fintech out there and that this stock instead might very well be the choice to go through. So let's get into the points made in the article here today, and on top of that, we'll discuss some alternatives as well. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. Now, this article was sent to me by one of my group members, which, by the way, if you want to join my group, that actually expires today. So if you're ready to take your investing serious, you want to be a part of the best group out there to learn how to do evaluation, set your price targets, get your free coaching, free courses, guys, so much. We'll talk more about it at the end. It's a pinned comment down there, but it expires today and the price goes up. This article specifically was discussing the talk around Block versus SoFi. Which one is actually better, is the better buy today? And it went into a lot of different data points across the spectrum. So I figured we'd talk about that today. And don't worry, guys, we will also discuss Robinhood as well, because I know that's one that's kicked up a lot in the community. Obviously created a lot of talking points there in my group. We've had, we talked about it multiple times, multiple different posts and videos about it as well in there, but we hadn't really talked a lot about it here on this channel. So don't worry. We'll talk about Hood as well in regards to this whole picture. Which one is the best fintech out of the group? I'll give you my opinion on that as well. So the first point was revenue growth. Now they started off with SoFi. They gave it 39% from 2021 up through last year, and Block was up 37% during that same exact time frame. Now, that right there seems like, all right, clearly SoFi is growing at a faster clip than Block is. I would agree. Clearly, it's just 39% versus 37%. Close enough to where it doesn't really matter all that much, but definitely the edge to SoFi. Now, the one thing I'll say in favor of Block is that their numbers are much larger, which is much harder to do. You guys got to keep that in mind. Sometimes we get so enamored with percentages and stuff like that, we lose context with those percentages. So what I mean by that is SoFi grew from just under 1 billion to 2.6 billion during that time frame in order to get that growth rate. Great growth rate, no doubt. But on the flip side, Block went from 10 billion to 21 billion, which the further up the scale you go in terms of revenue growth, the harder it is to put up those massive numbers like that. That's why I laughed whenever people are like, oh, Tesla's going to grow up 50% forever. It's like, it's impossible. Just you increase 50% at some point in time. Hey, you can't make it anymore, right? We're talking about you got to have like a quarter where you put out $1 trillion worth of revenue in a quarter. Like, it's not going to happen. So growth rates to me are relative, especially when the numbers are so different. So I actually say Block's 37% is actually more impressive than SoFi's 39%, just looking at raw numbers, because they had to make a bigger jump in regards to the numbers and obviously a much larger base to jump from. However, there's got to be more context than that. And during that time frame, SoFi completely turned the business around, changed it completely. Block didn't do that. It wasn't a turnaround story in regards to completely transforming the business. I understand they changed some things. They're still making some changes right now currently, but it is not the same as SoFi being essentially a student loan servicer turning into the beast and the behemoth that they are today on this other end. A totally different journey there. So for me, I find them both impressive. However, I definitely lean towards SoFi because of the situation that happened underneath. But again, I can't argue that Block didn't do a great job as well. So number two, net margin expansion. Now this one right here, there's definitely a big difference between the two. SoFi went from negative 49% to a net margin of 19%. So a huge jump right there. We'll explain why here in just a second. Block went from 2% to 13%. So right there, there's actually 2 points right here I kind of want to make in terms of the massive margin expansion that SoFi experienced relative to Block, the reason why, and of course why I like one a lot more than the other. So obviously SoFi had a huge jump in fee-based income, and that's just at the beginning of that curve, by the way, guys. That's going to continue to accelerate. I mean, they have massive deals on the horizon, and that's only going to expand further as we move forward. And of course, the tech platform, which is underperforming, but still providing higher margins to that bottom line. And of course, financial services as well, which is another high margin business that is accelerating for SoFi too. So all those things on that fintech side have created a huge net margin effect for SoFi. And I think that's going to continue to accelerate. Now, Block saw is moved significantly as well. 2% to 13% isn't bad. Not nearly as good as SoFi's, obviously, but not bad. But it was driven more so by their Bitcoin investments and getting sharper with that, making some changes and pivots within the business there to continue to maximize that. So it's a very, very shrewd move by Block, but it's based more so on Bitcoin and the investment around Bitcoin and kind of that thesis versus SoFi was growing out new product lines that have, to me, huge impacts long term. Again, we've talked about it before, SoFi building that mansion, but right now we're only seeing kind of that foundation being poured while other folks are putting up stick houses. So one appears to be growing more, but SoFi's over here in the background going, yeah, we're going to build something a lot bigger, guys. It's just going to take more time. So next up, we had EPS growth. I don't think the article mentions this, but it's one I want to put in here because it's important to me. SoFi had, essentially for the past 4 quarters, 1 cent to 5 cents to 5 cents again, and then up to 6 cents the past 4 quarters. And Block went from 52 cents to 57 cents, down to 26 cents, and then back up to 55 cents the past 4 quarters. So obviously Block has been profitable for longer and spitting off more earnings, but it honestly has been flat the last 4 quarters. Now on the flip side of that, SoFi is just starting, but is trending up each quarter. Management is guiding up for each quarter. So I would say in this case, you could probably argue either one of them being impressive. They're at 2 different stages, and that's kind of what makes it a little bit hard. Obviously, Block has been profitable for a lot longer. So as you're profitable for longer, you can expect periods of time to where you're just not really seeing an increase in EPS quarter over quarter over quarter. You're just continuing trucking right along. It becomes harder to grow that EPS. And on the flip side, especially if I took percentages, the percentages would look ridiculous to SoFi's favor. But then you got to look at it and go, okay, it's only 6 cents at this particular stage. Now, obviously, management has guided to a lot more here in the future, but we're still at the beginning of that curve there, which of course means the profits aren't as predictable or as guaranteed as they necessarily would be for a Block, for example. So this one you could argue either way as to which way you like it better. I gave obviously the slight edge to SoFi, mostly because I see massive expansion in future quarters in regards to EPS, especially in 2026, which is kind of where management's guided. And I think 2027 is going to be an even larger year, but I don't want to speculate out that far. So for me, both of them are doing a good job. Hey, we're not seeing it trend down, right? So one thing you don't want to see is that EPS number going down. I got other stocks where the EPS number is going down. Oh boy, different story altogether. I like where we're headed for both companies. So number 4 is valuation. Now you guys know I preach valuation on this channel repeatedly. You have to look at valuation. I can't stand all the narratives out there that say valuation doesn't matter, or you can't buy great stocks if you're caring about valuation. It is simply not true. There's not a single stock that I cover on this channel or any other investment I've ever owned where I have not used valuation to guide me, and it has worked every single time. Now in the short run, it may not work, but over the long run, it has worked every single time. That is part of being a buy and hold investor. If you're trading something different, understand completely, but we don't. We're long-term investors here. And so that right there is something I look at. So when I look at SoFi, right now they are sitting at a 30 multiple roughly and a 48 forward multiple. And Block is sitting at a 12 right now and a 26 forward multiple. So clearly, Block is cheaper from a valuation perspective. But I would also say there's a lot more questions at Block right now at this stage. And that's one of the reasons why it's trading so cheap. Now, there's other reasons as well. I understand that completely. But just based upon pure valuation, right now, I can't say that Block isn't trading cheaper in regards to valuation than SoFi is, because that doesn't factor into whether or not I want to own the company or not. Like, I'm not choosing one company just simply because it's cheaper. That doesn't matter. That's not relative. That's maybe relative in regards to, am I willing to buy the stock right now if I want to buy that company? But it has nothing to do with my decision to own one company versus another company. But for the sake of the discussion and the sake of what's being brought up here, I can't say that the valuation for Block isn't cheaper. Now, SoFi's isn't ridiculous. It's gotten ridiculous before. It's not ridiculous right now. And of course, as they continue to tick away more and more EPS on those earnings, that valuation is going to come down, especially if the stock kind of stays range bound, kind of like it is. So that valuation will get cheaper for SoFi in the future there as they continue to execute and clip off more of that EPS number. But let's talk about which stock is the best buy right now. Now, don't worry. I'm going to discuss Robinhood here in just a second. I'll kind of lump all this here together. Don't worry about it. But for me, first things first, before I even tell you which one I think is the best buy, don't copy me, guys. It's not prudent. And if you're going to copy any YouTuber out there, at least copy them correctly and listen to what they say whenever they give out when they want to buy stocks and things of that nature. I am buying the stocks at the prices that I want to pay based upon my position sizes that I already have, my portfolio makeup that I already have, and my companies that fit my goals the best, which will not be the same. None of those categories are probably not the same as yours. That's one of the reasons why I say don't copy me, just simply do a DCA, because then it eliminates all those other factors. It eliminates anything else, just simply DCA into the stock. That's prudent for most people to identify a great stock and simply DCA, because getting price targets And buying based upon your plan and valuation and everything else is really, really hard and requires a lot of work. And so many people get caught up in, well, this YouTuber said it's doing this, or they want to buy it here, so that's why I want to buy it too. And then they completely ignore all the factors involved. And that's the reason why that YouTuber wanted to buy it at that particular price. Because maybe they already had a full position and they just want super cheap bonus shares. And if they never get another share of that stock again, they're perfectly happy. Well, if you're a newer investor and you don't have a position at all and you want to grow a position, why the heck would you follow that person's price target? Doesn't make any sense. That's why I'm always telling you guys, just do a simple DCA until you figure all that sort of stuff out, till you get more familiar with the stock, more familiar with valuations. It's the most prudent decision that you guys can make. So just simply because I think whatever stock I'm about to talk about is the best stock doesn't make it the best stock or the right stock for you. So don't copy me. Let's just discuss the stocks individually because there's good points about all of them. So for me, I believe the best buy right now is SoFi. I believe Noto is setting up for a massive future, guys. Not some stupid short squeeze, short-term garbage, all this other nonsense that's out there, but setting it up, building that foundation for future years, building a massive foundation for future years. I also think they have the most stable business out of the group, especially when I'm comparing them to Block, because Block is very reliant on Bitcoin. SoFi isn't at all. So absolutely at it, but it's not a core part of the business. And so that to me is just gravy on top. But if Bitcoin happens to have issues, if all of a sudden different governments around the world decide they want to regulate it a certain way, of course, tax treatments on Bitcoin change all the time, which of course is one of the reasons why Block has had to make so many different changes and everything else. And it's going to continue to evolve as we move forward. Those are all risk for Block that I don't have at all with SoFi. That's why I like SoFi better than Block. But is Robinhood even better than both of those stocks? Now, guys, some of you aren't going to like my answer at all. And I'm sorry. Just you guys come here for the truth without the hype. That's exactly what you're going to get here. But to me, when I look at both of these stocks, SoFi versus Robinhood here, they are not the same type companies at all. Not even close to me. And for me, I want to own the company like SoFi more so than I do Robinhood. And I'm not saying Robinhood's a bad stock to own or anything else like that, but everybody kind of saying they're the same. It's silliness. To me, it's kind of like saying because Salesforce is a SaaS company and Palantir is a SaaS company, therefore they're competitors. That's not true at all. Nothing could be further from the truth just simply because they're both SaaS companies. And that's exactly how I view Robinhood versus SoFi. I don't have anything against Robinhood. I just don't view them as remotely competitors. Robinhood is clearly great at what they do, but they don't. And I don't think they can, and I don't think they will ever offer the same things as SoFi because of that bank charter and everything that comes along with it. So to me, they're not even really competing in the same direct space. Now, I agree there's some overlap. Clearly, there's some overlap, but they aren't taking from each other like a lot of the narratives are out there, and one's going to win and one's going to lose and all sorts of stuff. They're not even the same deal. Salesforce and Palantir can both win. I don't understand why SoFi and Robinhood can't both win. And oh, by the way, they're not taking from each other. They're taking away from legacy banks who don't even want that business anyways. That's why when you're going to own financial institutions, you need to understand financial institutions on a high level. It's really, really hard. I think you can get away a little bit more with Robinhood because it's not traditional banking in a sense. Obviously, they don't have a bank charter. Who cares? They got checking accounts. So does Fidelity. So does Schwab. So does every other brokerage out there. So if anything, they're kind of behind in that game. But I don't think anybody's out there comparing Schwab to SoFi, for example. They're just apples and oranges. Sure, they all compete in a very similar area, just kind of like I was saying, the SaaS companies with Salesforce and Palantir, but they're not the same type of company. So to me, they are both great companies. For me personally, I like SoFi better in regards to it fitting in my portfolio with the other companies that I own, and it meets my goals, my risk tolerance, and the exposure I want personally in my portfolio. So that right there is why I have SoFi above all these at this stage. Now, which one turns into the best stock to own? Who knows? I personally think they all can win and we can all be winners. This kind of reminds me of that whole Microsoft Apple debate that used to happen way back in the day. I think shareholders of both companies feel really, really good about their positions in both those stocks if they've owned them for a long time because they've both been great companies that continue to do well into the future. Sure, one has returned better than the other one, but I don't hear a lot of complaining either way. You can win doing it a lot of different ways, and I think you can absolutely win with all these stocks. And remember, if you want to understand that nuance, you want to get into those details, you're ready to take your investing to the next level, take advantage of the earnings flash sale that ends today, where you get all that through courses, through free coaching, through the best 6, 7, and 8-figure Discord out there. Guys, there is so much involved in becoming a member. Watch list with price targets, all my buy and sell alerts in real time, just everything involved. Check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next vlog.